Kenyans need to know is we are a generous people.
Yeah.
We truly are.
Currently, we are classified as the second most generous nation.
Oh, nice. Oh, okay.
After Indonesia.
Oh, okay. And I must tell you guys, when Mali and I started the TBT, and we sat down and asked ourselves, who should be our first guest? And it was a no-brainer. We decided we are going to Daktari, and we knocked, and he said yes. And I think that speaks volumes about you, Daktari. We are truly honored.
Hi. Truth be told, Charlene, Afadhali Chama, Harambee, na Kanisa kuliko insurance.
Truth be told, Mali, my friends, my colleagues, my family, they've got me.
They'll come through.
They will come through for me.
Kabisa.
Welcome to the third episode of the TBT podcast. Can you imagine it, guys? Woo! Woo! And on the first episode of TBT, we promised you that we would bring onto this table industry titans and leaders. And today, we have made that happen. We have an industry leader like no other. Mali, whom am I speaking about?
Oh, today we have a scholar. We have a great orator and speaker.
Preach.
A corporate guru who has worked in both public and private sector.
Yes.
We are blessed. And today, we want to introduce you the group CEO of Jubilee Holdings, Mr. Dr. Julius Kipngetich. Karibu, Daktari.
Karibu
Thank you,
sana.
Malia.
Karibu. You can tell the audience a bit more about yourself.
Yes.
Yeah.
I guess many people know me because I was former director of KWS.
Yes.
And we did a lot of things. Some people know me as a former lecturer, the University of Nairobi, Strathmore, USIU. Here I am today. I work for Jubilee Holdings, the owner of the insurance business, the biggest and the most trusted in East Africa.
Nice. Oh, so you are a lecturer, I'm there.
Yes.
Oh, nice. Do you still lecture or you are done with that?
Not regularly. What I do is occasionally give talks to students on various topical issues. Universities invite me to talk about my industry experience, the marriage of industry and academic knowledge, so that then students get perspectives from somebody who practices rather than what the lecturer says, which is mainly theory.
Yes.
Oh, no.
Fantastic.
Okay.
And true to that teaching part of your profession, before the lights, before the camera roll,
Yeah.
I was actually learning from Doc. Like, I picked up so much. So yes, thank you so much, Doc. It's good to have
Thank you.
a teacher, that teaching capacity. So happy to host you.
Perfect. So thank you and welcome to the Truth Be Told podcast episode 3. As we mentioned, we are here to make sure that your financial well-being is taken care of. We give you the knowledge, the tidbits and everything that you don't know about this industry. So welcome once again. So do we dive in? What have we said? Have we said Chama, Kanisa,
Marafiki, colleague,
yeah,
familia.
and the faith that they will come through, and they actually do come through, do they?
That's debatable. I think, honestly, Mali, at this point, retaining the risk, and expecting your family to come through for you.
Yes.
And even though they may love you deeply, which we can agree, because we are a very communal society in Kenya. The truth is, a lot of people are really hard-pressed financially. So even that family member who would have easily contributed 5,000 to you in the past may no longer have that capacity. Maybe the most they will do is 1,000 bob or 1,500. So that is why we need to dive into today's conversation with Daktari and see, do we need to change the way we have been managing our risk?
So what exactly is the issue, Daktari? Because and obviously we've said that yes, sometimes they come through, sometimes they don't. But there's still such a high dependency on these societal norms that we have. Is it a bad thing in the first place?
Okay. Let's appreciate Kenyans who have been managing risk in their own innovative way since independence. Harambee is the most potent insurance policy that we have. The history of Harambee dates back to the clarion call at independence, and it's there in our coat of arms. The only word there is Harambee.
Yes, true.
And then the other thing Kenyans need to know is we are a generous people.
Yeah.
We truly are.
Currently, we are classified as the second most generous nation.
Oh, nice. Oh, okay.
After Indonesia.
Oh, okay.
Oh, nice.
And that generosity is what makes M-Pesa work. M-Pesa works based on two things.
Yes.
It's based on generosity, so that's why money moves.
Yes.
And then it's also based on inequality. Money has to move because there's inequality. And which now brings us to why Harambee is an insurance. Because we are generous, because we are a very unequal society, we rally around those in need.
Yes.
And that's exactly the principle of insurance. The principle of insurance is you pool premiums, okay, which are calculated by actuaries, estimate the pool. And then we use that pool to pay claims for those who, for some reason, unexpectedly, the key word is unexpected,
Yes.
get a problem.
Yeah.
Then all of us in that pool, the only challenge, the only difference between Harambee and insurance is that Harambee, we know each other.
Yes.
Yes.
Because they are relatives, they are friends, we caucus.
Yes.
Now, the only person who knows the members of the caucus is the insurance company.
Yes.
That's the difference.
Yeah.
Yes.
But it's actually, the principle is the same. It's a pool, and then those who get a problem are assisted from the pool. Now, insurance is the more efficient platform. Harambee is not efficient.
Okay.
And then you see, Harambee is paid after the event.
Yes.
Insurance is before. So that is just the thing. But in terms of keeping us going as a society, it has helped us well. And what we want to tell our people is that insurance is better than Harambee. It's not going to eliminate Harambee. We are just saying we transition as many of our people from doing Harambees to insurance. Okay? Now, insurance companies have to demonstrate efficiency in the way they manage that pool, so that the administrative cost of the pool is so small, what insurers call the expense ratio.
Yes.
The administrative cost of running that. And then now we make sure that that pool, there are no criminals that make a false claim out of it. In Harambee, because it is project-based, people eat, people also, there are all sorts of fun. But in insurance, we must always demonstrate
Yes.
that the money we claim from the pool, okay, is reasonable, so that then the premiums come down for those who are contributing to the pool. The next thing that insurance must do is, if I contribute every year to the pool, the premium pool, okay, what happens if I am not making a claim? God has helped me not to get an unexpected event, an incident that would qualify me for compensation. Then we must think through and say, we must give people a no claims bonus.
Oh.
Yes. So you see, so that then it keeps encouraging me that
to continue paying. Yes.
I can see that the risks are not on your side.
Yes.
So I give you
There's an incentive. Yes.
as an incentive, so that you keep helping. And then for those who keep claiming from the pool, it means their risk management strategies are poor. And so therefore, we increase their premium and say, you must then contribute to this pool more because you are a risky person. So that is really the essence of the challenges between Harambee and insurance. The same thing, it helps mitigate risk, but in a less efficient
manner. Okay.
I love that. I just love even just the complementary nature of Harambee, our Harambee spirit and insurance. I have a story.
Yes.
So I'm in an alumni association for UON. My fellow comrades, hey. And at one point, we took up a last expense policy to cover our parents, and our family, our nuclear family units. And at one point, a decree was passed that for those who did not take up the policy, we would no longer be contributing when one is, when maybe one is bereaved.
Yeah.
And we tried that for some time, and it just wouldn't work. Like, even for those who had taken up the policy, like, we actually had to do away with that. Because even for those who had taken up the policy and you receive, let's say, this 500,000 payout, that communal spirit pushes me to feel that, if something has happened to Mali, I still want to go and say Pole in my own way, in my own special way. So the uptake was actually pretty good, but we still found ourselves, although right now it's voluntary, we still contribute over 100 of us every time one of us actually is bereaved. Now, on that same topic, Daktari, I hope even the viewers and the listeners to this episode can actually realize that as insurance people and players, we are not demonizing the Harambee spirit.
The culture that we have here.
That one will always be complementary to actually what an insurance product comes and does for a family and so on.
Correct. In fact, there is a lot insurers can borrow from Harambee, the spirit of it.
Yes.
Okay? Remember, people rally around a cause within a very short period. If somebody is bereaved, within 2 or 3 days, they have raised money, a funeral is held, and the problem is solved. Efficiency.
Yes.
Okay? So we need to learn from it. You talked about, the people, feeling that they have. We as insurers have to make, if it's a last expense, why can't we disclose who are the people who have pulled that money? Why not? Okay. Because in Harambee, you disclose who they are. Yes. You put in a WhatsApp group.
Yes. So before we changa, we know already who Jama amepata some lump sum somewhere.
That is what we need. So we need to borrow from them and say, why don't we disclose that the people who have contributed premiums to last expense are this?
Oh, wow.
And the names are there. So that then we know, we can even say, where your parents come there a second time. So there's a lot to learn on controls and the design of processes to make sure that the claims are genuine and actually the beneficiary deserved that.
Okay, so it's complementary.
Yes.
And then you raise a good point, and this is from your group in UN, comrades.
Yes.
What about the Gen Z people, the Gen Z fraternity and the younger people? Do you think we will still carry on this culture of contributing for people, or is it going to die at some point?
No, it will not die. The whole essence of insurance is risk mitigation. There are always risks all the time. Whether you are Gen Z, Gen X, Gen Y, whichever generation. The principle of risk management is the same. What will be different is the form of the risk management. So insurance companies must look at the products that they put on the table. Okay? Now, for Gen X want to live up to 60.
That's the goal.
So they will contribute, say, to a pension plan up to the age of 60. Gen Zs, them, they are like projects. They are not programs. They are projects.
We finish one.
2 years, today. I get my lump sum. I figure out what to do. Nobody can. So we need to redesign products around their behavior.
Okay.
And that's the essence of being customer driven.
Yes.
Being customer-driven means understanding the behavior of the customer and designing the product to fit their needs as we go forward.
Okay.
So we need to figure out and say, Gen Zs, first of all, they don't stay in the organization for too long. 3 to 5 years, they're gone.
No.
Yes. So we need to say, can we have a pension plan that fits into that 5-year period?
Yes.
Not 6.
Yes. Yes.
And where you can redeem
Yes.
after you leave.
Yes.
Not this conversation of waiting until 6.
You see, the original thinking for Gen X was you stay loyal with one employer
For life.
if you're 55 or 60,
Yes.
and then there's a lump sum.
Yes.
And then we put a restriction that, and up to the age of 50, you cannot draw the employer.
Yes.
No, those were designed for another generation. People like me, Generation X.
Yes.
So these Gen Zs are saying, it is now called gensification of products.
Yes.
Designing products to fit the changing customer taste. That's it.
Oh, wow. And I think we've touched a nerve there on product design, because what we have now speaks to Gen X and is still selling now.
Yes.
And you look at the percentage and penetration, and we talked about this in episode 1, we're looking at less than 3% penetration of insurance. It's exactly those people that we are speaking to, the Gen X, and the bigger population, which is the Gen Z going forward. We saw that in the recent in our country. Those are the bigger population. So how is it that we are going to design short-term or applicable products to this society? Okay, so we've tackled culture and the issue of Harambee and all. There's a principle of insurance, Daktari, and here, Insurance 101. The goal here is to teach.
Yes.
So, Insurance 101, principle of utmost good faith. This is one of the biggest principles that insurance applies and sits on. Now, if in the country's scope that we have, in the situation that we are in as a country and how we know our country, principle of good faith, let's not even talk about insurance. Do we operate with good faith? Do you go to a shop and expect that generally that what I'm being sold to is the right thing, it is the right price, or we're already doubting? What is it?
Okay, that principle of good faith is very important for insurance, because you see, as I said earlier on, it's about pooling premiums and then paying out to those who have unexpected events.
Yes.
So, if people make false claims to the pool, those who contribute to the pool will shy away.
Yes.
Okay, that explains the low penetration. Because people say, I would rather pay more for an Harambee, but I have control.
Yes.
It's my relative.
I know the people.
I know the people.
Yes.
I know the event.
And I have some emotional attachment to it.
Yes.
So, unfortunately for us in this part of the world, we are corrupt. Kenya is in the top 10 list of the most corrupt countries in the world. So, it complicates the insurance bit.
Yes.
Okay? I know we say, we are a deeply religious society. 95% of Kenyans say they are affiliated to religion.
Yes.
Okay, religion is supposed to make us, holy and toe the line.
Yes.
But that's just for Sunday and Friday.
And Christmas.
So we need to, as a society, we need now to reflect and say the low insurance penetration is because we just don't adhere to that principle of insurance, utmost good faith.
Yes.
That those who are making the claim actually reflect an event. Even the actuaries who do the mathematics to determine the premium, how much should we put in the pool to cover the potential risks that may arise.
Yes.
Okay? Do the mathematics without factoring in that variable called corruption. They don't factor in.
Yes.
If we do factor in, it will be an admission.
Yes.
Yes.
That we've accepted.
They have accepted that. So everybody tries to put a blind eye.
Yes.
But actually, I agree with you that we must then look at insurance as managing risk. It is nice for us as a society to manage risk. Okay? In the same way we do many other things, we manage many other things. Risk is one of those. Even in corporations today, you'll find a chief risk officer. What's the person? It's give you warning signs and what you need to do to mitigate a future event.
Yes.
Okay, which is likely to affect the event, to affect your company or your family. Now, some of these risks are existential. It affects your existence.
There's basically a need for unity in how we're operating as an industry
We must
as well.
collaborate
Yes.
so that then we bring confidence okay, to other people and say, you cede your contribution to Harambee in favor of insurance. Because you see, we are saying insurance is the most efficient way.
Yes.
Now, there are other inefficient ways. So we now must cede, but that ceding must drive corruption first. Okay? So that then I feel comfortable that I pay 100,000 for medical cover.
Yes.
And that other 100,000 is used efficiently. I would like even to know who benefited from this.
From this, yes.
Okay.
Remember the emotional connection?
Yes.
So that emotion.
I have contributed to this.
I contributed to this person. Right now it's blind.
Yes.
It's only the insurance company who knows.
Who knows? And you see, corruption is a very big word, big term. And when you think corruption, you think of maybe the cop who's standing somewhere on the road and flags down the matatu. But I want us to also, other than the claims part of the insurance, there are some subtle corruption practices that either, even the distributing agents, the clients, that they participate in. And I think it's for the benefit of our listeners, for the benefit of our viewers, it's good we really teach them. When we talk of people breaching the principle of utmost good faith, sometimes it's actually that withholding of material facts, where, by the time I'm coming to purchase a medical policy, and I know I've gotten a diagnosis, there's a hint. That there's a diagnosis for this and this kind of illness, but then I decide, let me run in, fill out a form, and under declaration, I go through the terms, and when I'm asked, do you suffer from any chronic illness?
No. None.
When was the last time you saw a doctor? November 2021.
Yes.
You get. So I think also, I do not want our viewers to think that corruption is when you have given out your vehicle to actually get into an intentional accident. We've seen all those within our industry, where they're literally even cartels. That actually ram vehicles, total vehicles, and then they come and claim after that. But it's also that withholding of material facts when you're taking that medical policy, when you're taking that life cover, So, when it comes to that corruption, it also needs to start with us, as buyers of insurance, and also us as insurance intermediaries, where you advise your client properly.
One challenge that we have in the industry and is how do we insure public transport? It has become a challenge. Any company that has attempted to insure public transport, matatu, buses, and the rest, has always collapsed.
Thank you. True, unfortunately.
The latest is direct.
Line.
So what we just need to do is let Kenyans understand. If I was the CEO of ESCC, one of my greatest jobs is culture change. I would drive culture change and behavior change and say corruption as a material cost to the economy. Material. Material is something of significance. So the significant cost of just corruption makes design of products very difficult, very clumsome. Why insurance is complex is we are trying to figure out how to make sure that there are no fraudulent claims. And so we make checks. We have to check so many things, assess so many things, because the fear of just being caught. So, guys, corruption at a cost.
Yeah.
Truth be told, corruption has a cost.
And a material cost.
And a material cost. And it's a damning statistic that actually a majority of the claims we pay as insurance companies are fraudulent claims.
Yes.
It's crazy. It's not legitimate claims.
Yes.
Okay, we talked about some jargon, Daktari. We have a lot of terminologies in our business, and you were saying we need to simplify. Now, I was thinking about that. I was looking at a policy document, a sample policy document for, let's say, a medical insurance cover. It's almost 20 pages. How do you reduce that into one document? It's one fits all. That it's very easy to explain to people. The conversations are easy. I sit with you, 5 minutes, we are done. You decide to take up a cover.
Okay. Insurance as a profession is not old. It's around 200 years old, and that could be a weakness in itself. A profession. Albert Einstein used a very famous statement. He said, simplicity is the ultimate sophistication.
Oh.
Yes.
When you are simple, okay, but that simplicity is backed by complexity behind. So it's a question of what are we fronting? We must front simplicity to the customer.
Okay.
Complex processes are internal for the insurance company.
Yes.
So those 20 pages, Male, needs to go the background. What reaches the customer is just that one page. Okay, you are signing up for this, and I am honest.
Yes.
The background, those ones will be led by lawyers, actuaries, the complex guys, the underwriters, all that complexity just got behind the scenes. What we front the customer is just, this is what you're signing up for. I am honest, and when an unexpected event occurs, make a claim, and I will pay.
So it is how we present it.
Yes.
Okay. And as we say that, we in our first episode we say that the majority, almost 95% of our business is distributed by agents. Charlene, you're one of them, and you are the people who carry this news to the people, to the customers. We are talking about presentation. A lot of Kenyans have been lied to at the point of sales on what an insurance cover or a policy they're purchasing is about, the terms, when they will be paid out, and all such. So we want to simplify, yes, and present it properly. And we are also faced with a situation where the salespeople that we have on ground are sometimes misrepresenting the information. So how do we cover both? Because we need... And that's what, as an insurer myself, I want to bombard the client with all the details so that whatever they were told at the point of buying, please read the terms and conditions, read everything. But we still need to present it in a simple and a profound way that can make the client buy. So Charlene, I don't know, from an agent's perspective, this is a dicey issue.
I'm always pro-agent. And I think if you've gone through every episode we've had, I keep talking of there's also a culture change within the intermediaries in the business.
Yes.
You now have people who are very keen and intentional in edifying the client before they take up a policy. So there could be those instances of somebody who will outrightly lie to a customer. But I think maybe that's for somebody who really understands and is a professional in the business and has gone through compliance and understands the importance of being fair, treating your customers fairly, which is even a course or training that even our regulator is very keen on, ensuring that insurance agents are upskilled on how they should treat customers fairly.
The TCF principles, yes.
Yes. I would say that I'm not really in agreement with that. Yes, there are instances of maybe mis-selling, probably because, we are in an industry where it's commission-based. And the clients are also very demanding. And maybe greedy, if I may put that in quotes and quotes. That we really want to buy that very shiny object that I need to put some sukari so as to convince you. But I think if we go back to the basics of appreciating what insurance is coming to do for you, I mean, if you are out there as a client possibly buying a whole life policy, okay, but being told that it will pay you in 10 years from now, I mean, that's probably your greed that has been, switched on to see this very high value and possibly go with that. But yes, really, this is a call to our colleagues in the business. Unasikia the kind of work we have out here. We need to do better and do some clean, needs-based selling, because when we do that, we'll be able to earn the trust of Kenyans and get more people taking up the policy.
So utmost good faith starts with the client, the seller of the business, and the insurer as well.
It needs to go beyond an agent. Okay. Mis-selling happens when the recipient of the information also doesn't know. My advice to the public and the government that works for them is we need every citizen must have some basic knowledge of economics. Every citizen.
Education.
The same way we teach English, we must teach economics. There are 3 branches of economics that the citizen then must know. One is finance and banking. Finance and banking, so then they understand terminologies of borrowing, savings, and the concept of return on capital. They must understand that. The second one is insurance. They must understand risk, So even by the time an agent shows up, I have some basic knowledge of risk management, so that as companies have chief risk officers, the chief risk officer in the home is a parent. Managing the risk, making sure that in case there's a fire, are we covered? In case there's an illness, are we covered? In case we have a car, are we having a valid insurance cover? What type of cover? By the time the agent comes, then I have basic knowledge. So I'm able to ask the right questions. Then the third aspect of economics that we must teach our people is the concept of pooling capital, which is capital markets. Pooling capital.
So, Daktari, as we continue, we are looking at changing insurance from a push product to a demand-driven solution. At this point, we are all clamoring, going and telling people, you need to take insurance, you need to take insurance. On the flip side, almost every other industry, it's people who are demanding for this product. So what change is there that needs to be in the industry or within the client base that will get us to that level?
Okay, let's compare with, I normally say, our more progressive cousins, banking. Now, why is banking demand pull? Banks don't ask a customer, save. The customer comes with their money. Okay? So the key thing is convenience. We in the insurance industry have to seriously think of convenience. Banks have branches.
Everywhere.
If you go to Equity has over 200 branches in East Africa. KCB has over 200.
Ukondani Gikomba, where there's a bank,
Then now, they extended that by having agents.
Mtaani.
So KCB, Mtaani, Equity agent, and all the others. So the reach is incredible. However, and above that, they have put digital platforms. Okay? M-Pesa is one of those digital platforms. So in terms of even just extension of reach, Kenya is one of the top in the world. We are now around almost 85% reaching the potential. And that makes us very high in the world in financial inclusion. Now, we in the insurance industry have to piggyback on that reach. And that is why programs like bank assurance are very important. Okay? So you have to have that extended footprint right on the existing platform as a value add. Then the other thing is greater collaboration. We need to compete with insurance companies on the basis of product, not on the basis of platforms. Banks share platforms, share agents. They don't worry. But as we are
we are siloed. Everyone is building their own.
Everybody is talking about the economies of scale, the disadvantages of large size. We must always be thinking, how can we collaborate? Ideally, in Kenya, we shouldn't be having 55 insurance companies. No. Ideally, we should be having less than 20, between 10 and 20.
But working together.
Working together, and they are large. So the expense ratios drops. Okay? There is greater trust. So the public now will cede Harambee to insurance. Okay, they will cede charge contribution to insurance because they are larger, they are more trusted, and the cost of administering that service
becomes lower.
That's the key thing. So we need to understand that. So we have a lot to learn from banking, how banking has evolved. Insurance, if insurance scales up and we scale up capital markets, we will have a very vibrant economy because people understand what needs to be done. And once we do that, as they say, gurudumu ya maendeleo begins to run.
You talked of incentivizing that customer who's not claiming with a bonus. And penalizing the one who's a very high risk kind of client. This week I sat down with a decision maker in a company, and he told me over the past 2 months, they had had 2 major group life claims, having lost their employees. And of course, he was very happy. This is a fantastic, product for the company. But he mentioned something very, it just led me, just to thinking so much. He mentioned that he expects, he's looking forward to the discussions he will have with the underwriter because of the claims in this year. And if they load the premium, he will just move to the next underwriter. Now, as industry players, especially from where you sit, how can we work on this? Because we're in an industry where company X will probably lose that business because it only makes financial sense for the premiums to go up. Okay, but if company Y willingly
takes it up at a lower premium,
at what point?
So you see, actuaries are the ones who do the probabilities of occurrence. It is expected that there will be 1 or 2 years that could go belly up and go crazy. That is the essence of life. Because you see, we are not prophets. Predict tomorrow accurately. Okay, we can do mathematical models and then say, okay, that's the probability that this will occur. So how much pool do we create and things like that. It's okay, there's no problem. That's how to do the game. But what we need to do as insurance industry is more collaboration, more sharing, more seminars of various models, and we learn from each other. Then we learn how these customers. So then the customers who then move from one insurance company to another one, we share that information. And say, this is our claim experience, okay? And we think this is the correct pricing. And so therefore, if you move to another insurance company, ideally we should give you that background and say, okay, that background is available in the pool, and this is the kind of claim experience. Because if they continue banning other insurance companies, you're actually banning the economy. You're killing jobs, you're killing activity in the economy. So I agree with you that we need to figure out how we share that information through a platform probably created at Aki. Aki is a very good platform, and we share that information and say, this is how this company. But ideally, the principal utmost good faith then begins and says, okay, did you guys disclose enough information for us to price your group life policy?
Yes.
Because we want also the insurance company to survive so that then next year they issue other policies to cover you. So it's a win-win. But sometimes we see it as, kunyakua,
price wars,
this one. So, because you see, insurance companies have been making losses.
Oh.
But you see, how much can you ban your loss? Because you see, when you make a loss, whose money are you banning? The one of the shareholder.
Yes.
You're banning the shareholder. And how long can you ban shareholder money before the shareholder says
comes and takes his money?
Say goodbye.
Yes.
Agreed. Okay.
So before we wind up, Dr. Ari, a good time to pose a question to Dr. Kipngetich.
So here's my question. How is the insurance industry addressing the need for more inclusive and affordable insurance products, especially for the underrepresented or underserved communities?
Okay, that's a very good question. How do we scale insurance to the lower levels, of society? Number one, we need to do more research. There's very little knowledge that we understand about the micro space.
Yes.
I recall I used to sit on the board of Equity Bank, and Equity Bank did not just move into the lower end of the bottom of the pyramid accidentally. It was driven by research. There was a lot of research which was done to understand the barriers. So how did we address those barriers? Number one was access. So Equity Bank told anyone who cared, just come and open the account, even if you don't have the money. The day, so that was one barrier.
Yes.
The second barrier was that minimum balance banks.
Yes.
They did a research about stickability of savings. Stickability of savings is what's the probability that somebody will come for that money within a certain period. And they found that 70% of that money was stickable.
Oh.
So they were like, well then why did you create a barrier? So they were told, open the account even if you have no money, but the day you deposit, you can come and pick it.
Yes.
But they knew from research 70%
it will stay. Yeah.
So that was it. So they were confident to open. And that is how they opened the floodgates. So we in insurance industry need to understand the same dynamic and say, okay, what are the barriers to insurance? Then we list them and then say, what are the material barriers? And then we address one by one and say, these are material barriers to insurance. In my view, it is mainly around product design, okay? And then who is going to underwrite until we reach a critical mass? Okay, it could be a donor, it could be government, it could be, a pool of, a combination of all of them. And then now we say, okay, this thing might be unprofitable for the next 2-3 years. Who is going to underwrite the loss? So government can say, we have a fund for financial inclusion in insurance. Government will give you, the insurance industry, 1 billion. Use that 1 billion to admit people who previously could not be insured because the price of the product is lower. Then now we will burn that money until we reach the critical mass. Once you reach the critical mass that is then profitable, then we fly.
Wow.
So we need to be a bit creative, collaborative, but the core of it is research. You must do research. Let's be data-driven rather than emotion or imagining.
Okay, I think the word collaboration has come up many times as business partners, and that's what we are doing here. Underwriters, agents, every stakeholder in this business needs to come together. We need to stop operating in silos, bring it together, then we'll be able to scale it up. Okay, perfect. So, Dr. Ari, parting shots to our viewers.
My parting shot is, guys, we need to manage our risks. Insurance is the best design for managing risks. I know you have your own ukarabat on how you manage risks, which is okay. But let's make the transition and the journey to the insurance world. It's a long-term thing before we insure a large part of our economy, but it's also important. Just like we are banking, Kenya has done very well, okay, in banking, and we are really, truly world-class in the banking space. We also need to bring our insurance space to that world-class. A lot of the work will depend on us insurance companies by the time we come to you, but we also want you to educate yourself in understanding insurance so that then by the time our agents come, they are able to ask, you are able to ask them the right questions so that they give you solutions that fit your needs in managing risks. I've also talked today about capital markets, and we'll talk about it another day. Yeah. And you see the linkages between the three of them in ensuring that we grow our economy forward. Thank you very much.
Thank you. Good. So, truth be told, Kenyans, yes, you Kenyans, are the second most generous country in the world. So we keep it at that end. That will help us with the penetration. So we have come to the conclusion of our episode 3.
Yes.
It's been an exciting episode, very informative guest. Thank you, Dr. Julius Kipngetich, for gracing us. And we hope that this will be able to increase our knowledge and the customer base that we are looking for in insurance. Charlene?
Thank you very much, Mwalimu. So today I just feel like calling Daktari Mwalimu. Yeah. Other than even just our viewers, our listeners, I have picked so much from this conversation.
Thank you.
And I must tell you guys, when Mali and I started the TBT, and we sat down and asked ourselves, who should be our first guest? And it was a no-brainer. We decided we are going to Daktari, and we knocked, and he said yes. And I think that speaks volumes about you, Daktari. We are truly honored.
Thank you. Thank you. Thank you for joining Truth Be Told podcast. I am your host, Mali Mtoto Mwanza.
And yours truly, Charlene Kimara. You may call me Mama Bima Kenya.
Until next time, stay insured.